Quiet on the set.
Hello and welcome everyone to Jason's in the House. I'm your host, Jason Parisella, real estate agent with Keller Williams Realty right here in Beverly. And our guest today is Patty Beckwith. She is a certified financial planner, CFP, with Constitution Financial Partners in Danvers. Welcome, Patty. It's a pleasure to have you on the show.
Great, Jason. Thank you so much for having me today.
Excellent. So why don't we start out by you telling us a little bit about your company, what we're going to be talking about today, just kind of give us a little bit of an overview.
I've been a certified financial planner. I received my CFP designation in 1994, and I've been a financial advisor for just about 27 years.
Oh, wow.
So I've been through a lot of market changes, a lot of market cycles.
So that's a good point. So you've seen many ups and
many ups and downs, yes.
Yeah. Can you just tell me quickly on the Certified Financial Planner, what does that entail to become a CFP?
That is an extensive course that covers all aspects of financial planning, from insurance, from investments, estate planning, taxes, retirement plans. And I was lucky enough to take the exam back in 1994 as the exam was just you took it at one sitting.
Okay.
And now you take it in several different sittings for the exam. But to keep that CFP designation requires continuing education, so you really need to keep up with what's going on in the markets. And of course, we know they're changing all the time.
Yeah,
so it's very interesting, yes.
So, I mean, so someone should look for that designation, CFP.
It's very important to look for someone to work with who has that certified financial planner designation, because that really tells the investor or the client that the person, the individual, is up to date with all the laws, all the changes, the markets, and so forth. So it's very important because of that rigorous continuing education that we all have to adhere to.
Right. So you obviously have a lot of experience. Why don't you tell us some of your views about financial planning?
I mean, in working with clients and financial planning, generally speaking, what I'd like to talk with you and your viewers today are financial planning issues that everyone should really review, at least on an annual basis. In setting goals as far as our financial plans are concerned, what do we need to know? We really need to know, what is our starting point? Let's take a look at our fiscal health first and foremost. A balance sheet. Devise a balance sheet where we list our assets and we list our liabilities, the debts that we owe, and compare those to see how we can balance it. And of course, build up the asset side of that sheet. In doing the balance sheet, the assets versus the liabilities, we can track our financial progress every single year. So we can see, are we on track to meet our financial goals?
So you would advise someone to do that yearly?
At
least once a year?
At least once a year, yes.
So before they come see you, would you recommend that they do that first?
Yes.
So when they walk in to see you,
we have the Bible right there.
Okay.
Yes, indeed.
So you can actually see exactly what's happening.
And a lot of people have set goals in mind. We all want to save for retirement. Perhaps we're saving to buy a house, to send a child or even a grandchild to college. You know, these are all wonderful financial goals that are unique to us. And in order to reach those goals, we need to know what our baseline is. And then on an annual basis to keep looking at that to see, are we on track to meet those financial goals?
Right, and that's certainly going to see whether you're living up to your end of the deal too, as far as growing the portfolio.
Sure, sure. But along the same lines as to the asset and the liability balance sheet, I also ask clients to consider filling out what I call a household expense worksheet. And this is a rather detailed worksheet that covers recurring monthly expenses, miscellaneous living expenses, and for people who use their debit cards a lot or use cash on a monthly basis, it's really difficult to keep track of where are you spending your money on a monthly basis. And so this worksheet, covering many aspects of our expenses that we spend money on a monthly basis, really can be very eye-opening for people and a great exercise to see where are we spending our money. Along those lines, when we look at that and it's right in front of us, we can see, then we can analyze and make cuts or increases in certain categories. So for instance, if we dine out, maybe we go out to dinner twice a month, and we spend, twice a week, and we spend $80 a week on going out to dinner. What we might want to consider doing is maybe only going out once a week and saving that $40. Well, over a year's time period, that's worth over $2,000, $2,080. And so we can look at reallocating that $2,000. Maybe we want to look at going on vacation. Or better, what might be a better idea is to increase our 401k contributions or make a traditional IRA or Roth IRA contribution. So filling out this household expense worksheet, where sometimes it can be overwhelming because there are a lot of line items, but I think it's important that people know, what are you spending your money on?
So you can that's actually, people that know Excel, that's actually an Excel spreadsheet.
Yes, and I can email to any viewers who would like to have this.
Keep track of it, even on a yearly basis or whatever.
Right. Well, this is an annual, but sometimes people have a difficult time doing annually, and so we can certainly use this on a monthly basis. Yeah. And then, of course, you need to be disciplined to do that, though. But it can be done, and I think it's an important exercise that people go through, because you need to know, where are you spending your money, and how are you saving your money?
And that's a very good point, I think, too, to really focus on not only, the money that they have and what your role is in growing the money or reaching their goals, as far as identifying where some other money might be.
That's right.
To invest, to, take a vacation or whatever. And people, like you said, too, it adds up. $80.
Oh, you nickel and dime yourself, every month. And so especially people who use their debit cards or use cash, it's very difficult to keep track of that. If you write your checks, you pay your bills online, you can pretty much go through that household expense worksheet and fill it out. And everyone has a general idea as to what their monthly nut is, but it's all that discretionary spending, the noise around that people sometimes lose control of. So it's important.
A lot of it too, the cash. You go to the Dunkin' Donuts or Starbucks, you go to get a coffee, or you spend it here or there, and all of a sudden it keeps
So instead of going out to lunch, maybe we take a brown bag, and but it's all a matter of discipline. Financial planning is really discipline.
Right.
And so the balance sheet, the assets versus the liabilities, the household expense worksheet, very important as a stepping stone, and important to review it on an annual basis, just to see if are we on track.
No, you must run into, especially in today's economy, where identifying available money for people to invest. Because all of a sudden they're looking at they owe more than what they are bringing in, or they're kind of on a negative.
Right.
So you're dealing with that type of stuff too.
Well, in looking at a client's investment portfolio at different stages of life, a young person who's just starting out with their 401k, they may need help in making a choice as to, what do I invest in within that 401k? How much should I invest? People, when they look at 401k investing, they look at a percentage. I'm going to invest a percentage of my paycheck. When it's actually a dollar amount, for someone who is under the age of 50, we can actually invest or contribute to a 401k upwards of $17,000.
Wow. For
a person over 50, there are catch-up provisions in which you can add an additional $5,500. So someone over 50 can actually contribute $22,500. So that's a big chunk. Not many people are able to do that, but if you're able to maximize your contributions, what you're doing is you're lowering your taxable income and having those monies grow tax deferred to fund a retirement that we would like to think that we could not outlive our money.
Right.
And that's an important issue also.
So when you say the 401k, does that have to come from the person's employer?
Well, that would be if you are employed in a company that offers a 401k. Small businesses may have other types of retirement plans that employees can get involved in. But typically speaking, we talk about 401ks. If those are not available, then I strongly suggest that clients fund either a traditional IRA or a Roth IRA. And that really is dependent upon, after they've talked with their CPA to see what their tax situation is, does it make sense to do a traditional where you get the tax benefits now, or do we wait and get the tax benefits later?
Okay.
So it's really, from a tax perspective that you would make the decision. Also, your length of time that you have until you are going to start withdrawing those funds.
Right. So so you must work with accountants on a regular basis.
Absolutely. Yes, indeed.
Yep.
It's a very close working relationship because of knowing the tax. How do we minimize this client's taxes as much as possible, and save for the future at the same time. So I'm thinking this logistically too. So they have a 401k at work. Isn't that money going up to a separate account, or how do you work with the? You know what I'm saying? Well, as a financial plan, they don't necessarily have the account with me at Constitution Financial Partners, but as a certified financial planner, we take all of the assets of a client and manage those, because I need to know what how the 401k is being managed.
And you might advise on
and then that
funds.
will let me complement it with other investments that I would handle for that client. So it's really, that asset and liability worksheet that we talked about, very important, because those assets need to complement each other.
Yeah.
And actually, that's a good segue for asset allocation. How comfortable are you with your portfolio, especially given what's happening in Europe? Our economy here, although we certainly have been recovering and doing nicely, the market's been very good to us these last several months. But there are a lot of uncertainties, and people certainly who went through the tech bubble in the early 2000s, and then more recently the financial crisis. A lot of retail investors certainly got scared from the markets and have become much more risk averse. Well, depending upon what your time horizon, it might necessitate a change in that asset allocation. And when I talk about asset allocation merely is, how do you put together your pie? What percentage do you have invested in cash, bonds, fixed income, and stocks? And naturally, that's going to change given your time horizon. The longer that you have, you're going to be invested more heavily in growth. Whereas for someone who's more retired, they would have more invested in cash and fixed income, because those are income-producing investments. So this particular pie right here is a third, a third, a third. We have 80% growth, 20% very stable conservative investments for a very young person or someone who's accumulating wealth for the next 20, 30 years. Or, do we have it balanced to 50-50? But it's unique to an individual and how
their age too.
Their age, right. And what I often say, it's that what's your sleep number? Right. Because your asset allocation, you need to sleep at night. I don't want my clients worrying about, God forbid I have to go through another financial crisis or my portfolio going down, X number of percent. So it's very important, and this definitely needs to be looked at least on an annual basis. And that's where we bring in the 401k. We bring in all of the assets.
You get an actual, an accurate
picture.
Pie that you, yeah, because if you leave some of that out, obviously you're not going to have, it's going to be skewed.
That's right. And now this is a very general pie chart in that we're talking about 3 different investment categories, but we could even divide that even thinner slices and include commodities. Alternative investments have become very important in constructing portfolios for clients because alternative investments are not correlated to the stock or the bond markets. And so you certainly want to have a percentage of that type of security in your overall mix. But this, generally speaking, is, again, the stepping stone and where we build that portfolio. What I also wanted to talk with you about, and your viewers, that I do with clients on a regular basis, especially when things change in people's lives, beneficiary designations are very important. And
that has to do with the IRAs, correct?
The IRAs, but not only IRAs, but your will, your estate plan in general, any annuities, any account, really, that you want to leave to an heir needs to be included in some type of an estate planning document. For instance, if you have a death in the family, a divorce, you're remarried. You know, people have, for instance, because people have changed jobs, especially in the last decade or so, they may have several different 401ks. They need, if something happens in their lives, they need to change the beneficiaries on each of those accounts. You know, if you're remarried, you don't want to leave your previous spouse the primary beneficiary. If you have another child in the meantime, you certainly don't want to leave that child out as a contingent beneficiary, possibly.
So when you say, so someone goes, say they had 5 jobs in whatever 10 years or something, so you have 5 different 401ks. Can you combine all those into one?
Yes, you can. Well, you can roll those over.
Wouldn't that be more logical to?
Absolutely, absolutely. And I have clients that they come to. First of all, it's very difficult to manage 5 different 401ks, but you'd be surprised. People, you know, starting up, leaving that job, and just don't want to have to worry about it. And people procrastinate, and it just continues.
Makes it more difficult to track the beneficiaries too.
Track the beneficiaries, absolutely. So no, consolidation. Keeping things simple is my theme, certainly.
Well, it's life is so confusing now anyways with everything that's happening. It just kind of goes along with that. So you must work with a lot of attorneys too. Attorneys, accountants, and financial planners, kind of all 3.
Yep, that's our sphere, we call it, because we're integral to a client's total financial picture, looking at, you know, their beneficiary designations, working with the accountant to minimize their taxes. Very, very important. So looking at someone's total financial picture and bringing in all of their assets, analyzing, you know, where are you, why do you own what you own, and how are we going to make that more, how are we going to grow that over the longer term?
Let me ask you too, are you dealing in mostly, what are you dealing mostly in, stocks, mutual funds? I mean, what do you?
Yes, primarily
individual stocks.
Well, no, not individual. My expertise is not in picking stocks for my clients or putting together a portfolio of stocks, bonds, cash items, that type of thing. What I do is working with a client, look at professional money managers, whether it's mutual funds, which are diversified portfolios of specific types of securities and putting those together, or hiring separately managed accounts where we hire a portfolio manager and he or she are making the decisions as to what stocks or bonds to purchase or sell. So the client and I are not involved in that decision-making process.
So you're doing mostly mutual funds.
What we're primarily interested in is how is that pie put together? You know, do we have enough invested in emerging markets? Do we have enough invested internationally? Large companies here in the United States, mid-cap, small-cap. They're all different types of securities, and you want to hire the manager who's got the expertise in those particular sectors of securities.
So do you
put together that portfolio?
I would imagine too that, I guess yearly or whenever you need to, you have to reallocate. So say you have a stock say it's a third, and all of a sudden the stock took off, and now it's 45% stock. So you want to reallocate, correct?
Absolutely.
Is that how it works?
And that's why we need to look at it on an annual basis. So for instance, in 2008, 2009, the bonds did very well and stocks did poorly. And so what one would have done, should have done, but it's very difficult, is to sell their better performer, right? To sell our bonds and purchase stocks. But people are fearful.
Right.
And so that's a very difficult proposition, but it's called rebalancing. And so what you're doing is you're selling your better performer and you're investing in your not so good performer. But over time, that is going to smooth out the wildness, the wild gyrations of the markets.
What are your thoughts? What are your thoughts on individual stocks?
Well, you know, I have many clients who have portfolios of blue chip stocks. You know, Exxon is a very large holding, IBM. And for those people that are at AT&T, those types of stocks, if they bring them to me in their portfolio, we typically leave them alone because they're great companies. They're blue chip, you know, pay really nice dividends. But if something doesn't, you know, if there's a stock in there, if there's a stock in there that I feel that would be better allocated someplace else, of course, I would make that recommendation to the client.
Right.
But in doing so, you have to take into consideration the cost basis. You know, did they inherit that stock from their parents 40 years ago in which they, you know, it's possibly all gain. So you have to take the tax ramifications into play also. Yeah,
because that's a huge difference on your return. If it's in a tax deferred or tax, what's the other?
Well, this would be it could be in a retirement account or some type of a tax deferred account that if you were to sell those securities.
Right.
But if it's in a taxable account, which most of those securities are held in, then that you really have to take that into.
Yeah, to try to manage your tax consequences at the end of the year with these funds that are not in these.
Right.
Tax
and that's why it's
funds
important. And that's why it's important to work with a CPA. And it just gets more complicated as time goes on. And now the tax rates may change at the end of this year. And but right now, capital gains are taxed favorably at 15%. So someone who has a very large position, you know, over the last several years, you might want to divide those transactions and spread the tax over several years. But that's a conversation that you need to have with your accountant and your financial advisor.
Right. It's such a specialized. Every situation is so special.
Everyone is very unique, and as I indicated and you had asked, it's really looking at the client's total financial picture, not just, you know, what they have with Constitution Financial Partners.
Yep. Did you want to touch on anything else on IRAs or that piece? Was there anything else you want to talk about?
Well, it's tax season right now.
That's true, yeah.
And people are well aware and looking at their taxes and saying, oh my goodness, I have to write a check to the IRS. Well, for self-employed individuals, you can make a SEP contribution. If you don't have any employees or that you don't want to cover the employees, you could make a SEP contribution. You could also do traditional or Roth IRA contributions and really lower your taxes.
Okay.
And help minimize that over, you know, for last year's tax.
The whole arena of tax, you know, SEPs, 401ks, IRA, it's
very complicated.
It's very, very complicated.
Very complicated.
Yeah. Let's talk a little bit about emergency fund.
Yes.
And how that all ties into this whole thing.
In looking at a client's, well, first and foremost, before we even talk about the pie, the asset allocation and so forth, really strongly suggest that a client have a cash cushion. What normally is called, from financial planner talk, is an emergency fund. Having at least 3 to 6 months of cash that's easily accessible. Not too easily accessible, but, you know, in case of an emergency.
Right.
What if you have large car repairs, an appliance, you know, you have to replace an appliance. What if we lose our job? You know, we want to have that cash cushion. And the reason we want that cash cushion is not only to help us through that time, but also to so that we don't have to dip into our longer-term securities.
Right.
And have to pay the penalties. And I can tell you that when you need to dip in those longer-term securities, it's probably going to be the absolutely wrong time to do it.
Yeah.
And so if you have the cash on the sidelines, you can continue to let your long-term assets grow. So really look at having an emergency fund, or even for short-term. If I know a client has a large tuition, a large college expense coming up, you know, we certainly keep that money in cash. Anything that's coming within 2 to 3 years, really look at keeping those monies on the sidelines, because I don't want clients to have to tap into their longer-term investments.
Right, right, because that's important. And I think I would assume this economy, it's probably a better idea to have 6 months.
Probably. Well, and again, everyone is unique in that
right.
situation, because if you feel that you're very stable in your job or unstable, then maybe you even want to have even a year's time. If you're self-employed, you know, if you're the breadwinner of your household. So, you know, when we say 3 to 6 months, that's really a rule of thumb, not necessarily geared toward an individual, because we all have unique circumstances that you have to take into consideration.
Yeah, that's a good point. Even a year now wouldn't be a bad idea.
Right. If you felt that your company or your business wasn't going to do well, or, you know, whatever the situation, it would dictate how much cash you would have on the sidelines.
Right, right. Did you bring, I thought you, did you, go ahead, do you want to say something else about?
Well, what I wanted to say is that there are many other financial planning issues that we could talk about
it just
today.
Goes on and on.
It just goes on and on. And, but what I would like to offer is that Raymond James publishes a magazine. It's called Worthwhile. And in this issue, from the winter issue, it gives 12 tips, financial planning tips, looking at Social Security. Retirement income planning is huge. There are 76 million baby boomers that are thinking about retiring. And so if any of you, your viewers would enjoy a free copy of this that talks about those 12 issues, I would be happy to provide it to them. And also my website is Constitution Financial Partners. You can go, there are a lot of resources. We talked about risk. You could take a risk tolerance quiz on that on the website.
So you actually have something right online?
I have something right online, yes.
So it's Constitution Financial?
Financialpartners.com.
Excellent. There must be some other real good resources on there that...
Oh yes, all one-pagers that talk about different financial planning aspects of life.
Excellent. Well, thank you very much for being with us, Patty. That was great.
Well, Jason,
we may have to have you on again.
Well, I would like that, yes. Well, I mean, we could continue this conversation. Certainly, thank you very much.
No, you're welcome. So we want to thank BevCam again today for having us here, and we thank you for being with us here at Jason's in the House. We look forward to seeing you next time. If you have any questions for me, you want to be a guest on the show, or anything at all, feel free to visit my website, which is jasonparisellateam.com. See you next time. Thank you.